Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Today is November 11th, 2025. A lot of you got your first snow of the season. Even down here in Florida, it's dipped down into the 40s in South Florida here this overnight. Harvest is wrapping up. To all the veterans out there, thank you for your service. We have a lot to cover today, so I'm going to start with the recommendations and we'll go through the analysis. This is one that I would really like, let's zero in and let's get the work done that we need to get done, because this is an important time in markets, in my opinion. So let's start with the recommendations. We have kind of a laundry list of recommendations, so let's really go over these. First of all, we're going to sell an additional 20% of quarter four soybeans. This is going to get us to 100%. It's always scary, right? When you do what you do and when I do what I do, to say, hey, let's get to 100% sold of a specific strategy. And I'll talk about the logic behind it, but we've sold into this rally. We have had the best prices of the entire year. This is the third week in a row that we're selling into the strong soybean rally, and we're gotten up to 100%. We're also going to sell 25% of quarter one soybeans. That will also get us to 100%. And we're going to sell an additional 20% of new crop 26 soybeans. That gets us to 50%. Now, if you've been following from, say, July, you should be carrying basis contracts. That was the recommendation on our quarter three basis and quarter four basis. We've locked in basis contracts against the December corn futures. So on those basis contracts that are locked in against the December corn futures, we're running out of time of those. We have to price those pretty quickly. So we're going to lock in the futures on those basis contracts. We locked in the basis contracts back, strong basis on the quarter three, some of the best basis of the year. We locked in the basis. We're holding the December futures. We're going to lock in the futures now, and then we're going to buy calls. I suggest spending 10 to 15 cents. The volume, it's the 75% because that's what we had basis contracts on. So it's all of the basis contracts that you would have in that strategy, but it comes to 75% of the quarter 325 bushels. And we're going to do the same thing with the new crop 25 bushels that we had locked in basis. So we're going to lock in the futures. We had already locked in the basis way back in July. And we're going to buy March calls, spend 10 to 15 cents. That should get you, depending on when you get in and all that stuff, it should get you a strike on that March between about 440 and about 450. Now, we're going to go over the details in just a little bit of kind of the market. We're going to analyze the charts and so on and so forth. But I'm going to say maybe it's even public service announcements, or just a few things we need to be very aware of. First of all, this week on Friday, we're going to get a USDA report. We've had the government shutdown. I was counting it up. I believe this is the last report, that the last updated position of the funds that we have is from September 23rd, I believe. So we're almost 2 months of no updates on the position of speculators. Probably they've been buying soybeans. It looks like it. If I had to guess, they've been sneaking out of their short corn positions that they had, but we don't know that. Hopefully the government gets reopened, we get updated numbers, but that can give us some good or bad. That can give us some fireworks, because now all of a sudden it's like they pull open the curtains and everybody gets to see what the speculators have been doing over the last almost 2 months. So that's one thing that'll happen. Also, we didn't have our October USDA report. We will have a USDA report on the 14th. So it's a few days behind when we were expecting, when the calendar came out, but on Friday, there will be a USDA report. Always potential for fireworks on USDA report, but this is like 2 months accumulated, plus government shutdown, plus we don't know what the speculators have been doing. There could be fireworks on Friday, and maybe even before that, if anybody feels like they get a hunch of what's going on. So Friday's a big thing. Another thing on soybeans that's just important, we've talked about this trade war and all that. It's kind of all over the news and how farmers are doing. As we saw this rally in futures on soybeans, the basis in Brazil and really South America has just absolutely collapsed. Their cash prices fell so much that they are actually still cheaper than the US. Yes, we've seen a little bit, especially in the Eastern Corn Belt, we've seen a little bit of an uptick in basis in the Eastern Corn Belt. There's evidence that maybe there's a little bit of push, but it's really tricky in my opinion, because that recovering basis, that's what we usually see after harvest. So is this just the normal basis recovery we typically see after harvest? Or on the heels of harvest? I know some people aren't quite done. Is this just a normal basis seasonal recovery that we see around this time of year? Or is this actually evidence that there's a deal, there's demand, we're going to see that? So I'd be cautious about being too bullish soybeans. And then the other bit of that is delayed planting. Delayed planting, number one, they're only about 3 percentage points delayed now in Brazil. So they've trimmed that. They got up to about 8% delayed, and they've trimmed that down to 3 over the last 2 weeks. So they are playing catch up. But it's also important to note the first hurdle is they have to plant enough soybean acres to get their double crop corn in. For a proxy, I say 30% by the end of October. They checked that box. They were at over 40% by the end of October. And then the next thing that's important to realize, and this Brazil's big north to south, it's not true for all regions, but big picture, if you could plant a double crop corn crop, that means you have enough rainfall to pick your beans, plant your corn, and get your corn roughly through pollination. So that last rain is timed out. Hopefully you get that last rain before the dry season comes in that gets you through pollination. So you can be a month late on planting, probably 6 weeks late on planting soybeans, and as long as you're not going to do the double crop corn, you could still have pretty close to maximum yield potential and pretty close to maximum acreage. I don't expect, even though we had a bullish story of delayed planting, I don't expect a bullish, that does not mean either a cut in acreage or a cut in yield yet. Could it happen? Yes, we're not there yet. All that's to say, as we look through the charts and look through the analysis, we have to remember when it's talking about soybeans, monster crop out of South America, still probably either the biggest or the second biggest crop the world's ever seen. It would be my guess, probably the biggest. It's underpriced. The basis down there absolutely got destroyed, so they're actually offering soybeans cheaper. The friendly basis we've seen stateside is strong crush numbers, which is very good, but it might not just be that strong exports. It might just be the seasonal recovery. And we have a USDA report, the first one in basically 2 months, coming out on Friday. Hopefully the government opens back up and we'll be able to see the position. They'll pull the curtains on. We'll be able to see what the speculators have been doing. So there's just a lot of unknowns, a lot of major pieces moving around. And I just want, with all that background information, let's jump into a little bit of analysis. We're going to start by looking at January soybeans. We could look at November and January, but a lot of markets have already gone. Let me grab a marker here. Let's get or is it black? Let's go with black. There we go. So we're just going to look at January. Some cash markets are still trading November. Most of them have switched to January. And here's, first of all, let's look at this range where we traded most of the year. 1080 was the top of it, and close to $10 was the bottom of it. That's where we spent most of 2025. Then we got this big old run up. And we got, at the extreme, we got almost up to 1140. But I want to circle this because I want to zero in on this. And we're going to look a little bit, just kind of technically speaking, as we zero in on this. There's a couple things to just note. And the reason that I like technical analysis has a ton of limitations, but if you think about it psychologically, a lot of it makes sense. So you get up here to the high water mark. And ever since, and that was, let's see, we're here on Tuesday, Monday, Friday, Thursday, Wednesday, middle of last week. That was the high water mark. Ever since then, whenever we got close to that level, there was nobody that was willing to buy. So we have these highs getting lower. That doesn't necessarily mean the market is done. But when you get to the top of the market, when you get closer to 1140, there's nobody out there saying, this is cheap. Let me scoop up some soybeans. Does that make sense? There's nobody that's stepping into this and saying, 1140 soybeans are on sale. Let me jump into it. What's actually happening is whenever we get progressively lower and sellers become more and more willing. So they're not selling 11 or 1110. They're not saying, hey, that's a deal. But anything, man, let me get some beans locked in 1130. That seems to be a friendly thing. And I've mentioned this before. I'll mention it again. Whenever we get a USDA report, a lot of times USDA reports, switch that to blue, they're sitting at the 20-day moving average. So if that stays in, if you just say, okay, the USDA report's going to be at the 20-day moving average, if that keeps going up strong, we're still probably going to be 20 cents. We got Wednesday session, Thursday session, Friday session to be at the 20-day moving average. It would be very likely, in my opinion, that we work our way down somewhere around there. Now, if we can find support there, oh, good. Maybe we can keep going back up. But what are we going to see on this report? Are we going to see a small crop? Are we going to see really tight carryouts? Is it going to be a friendly report? It might be. That would be nice. Maybe we get another run up in beans. But the 200-day moving average and this gap, so we got this gap down here, and we got the 200-day moving average. If we don't hold, say, above 11 or 1110, if we don't hold that, next support is way down here, maybe 1050. So it would not surprise me too much if a week from now we're trading anywhere from 50 to 70 cents lower.
I'm not saying I wish that. I'm not saying that that's going to happen. But unless we can really hold the support, and this is one of those scenarios where you hope for the best, but if we lose support, it could fall pretty quickly. Speculators, if everybody sees, oh man, they got long, why are they long? They might want to flip the switch and say, okay, people are going to be able to see what we're doing. Let's go sell this thing. It's the highest price of the year. We're 50 cents above the range we spent all of last year in. I don't really see a reason why we should think that the fundamentals are better than they were last year. For me, this is a sell. Anything, over 1090, 11, we're at 1120. This is a sell. That's why we're selling into it. And as we look at new crop, I know it's early to look at new crop, but let's just think about this. If we get this in blue, the highest price, new crop 26, that if we look at kind of outliers, that first blue circle, that was a weather scare in South America. Here we have a weather scare in South America. If you had locked in $11 beans, you would have been happy until about 2 weeks ago with your new crop sales. We sold 30% last week, selling another 20% now. Having half your crop priced with the Chicago Board of Trade at 11, that seems like a solid place to start your average. If your average price is $11, if your average sales price on new crop is better than basically the entire new crop price that we had in 2025, that's just a step forward in risk management, in my opinion. Should you do futures, or should you do just a cash price, or should you do an HTA? I would look at your local bids. If they're really punishing you on basis, you can do an HTA. If it's halfway reasonable, there's no problem with locking in 26 cash prices. You know what you're going to have coming in the door once harvest rolls around. Now, I know some of you are wrapping up, most of you I think have wrapped up soybean harvest, but man, I'm already selling next year's crop. I don't even know my cost of production. We're getting a stake in the ground, right? We're moving towards it. The flip side is, if you have soybeans in your bin that you're going to store till next spring, we haven't even touched those. So yeah, we might have higher prices. I hope we have higher prices. We have half of our new crop to price at higher price levels. And we've got all of our quarter 3 and all of our quarter 4 soybeans. We've got work to do, but we're taking advantage of the opportunities. Now let's shift gears to corn. First thing that I want to just talk about corn, on corn analysis, we're going to focus on the recommendation, what was done. So here basically during this dip here, basis got strong, but the futures was horrible. So what did we do? We wrote a basis contract. So depending on where you locked that in, futures were probably between 4 and 410-ish. It's where probably most of you locked in that basis contract. And then now we're trading at 430 on that. So you locked in a good basis, and then you picked up another 20 cents on top of a good basis. So it's already 30 cents in some cases. Well, 20 to 30 cents, call it a quarter. So that's already been a good strategy. The kicker, though, and the reason for the calls is, man, let's say that, you locked in a basis that was 20 cents better or 10 cents better because you did it at the lows, and then you got an extra, 25 cents by waiting. So you're already 35, 40 cents ahead on that corn. Good deal. But what should you do now? We typically get a Santa Claus rally, and I still think that we have a chance to break through that resistance and to really make a move up to the upper 4s. Beans are up here, corn's down here, that ratio spread, I think those come together, right? I think beans come down, I think corn goes up. And because we've had such boring trade on the corn market, if you look kind of right in here, we've just not really done anything. That low level of volatility has really made options pretty cheap. So you can get a call for not too expensive. And we're sitting right at support of the 20-day moving average. Because it's a call, you don't have the downside. Well, you have limited downside risk to whatever you spent on the call. And if we were to get a move up, we could really get a friendly move up. Why not, right? Keep yourself long through March. Get yourself a call. It's already been a good way to wiggle out of, any summer bushels and any new crop that needed to be priced. So we've already made a couple of good moves. We're just adding to that and extending the wins on that front. And then some of you are probably thinking, well, why don't I just roll it? I can just roll it at the elevator. And that's fine. If you don't, that is not a bad option. But I wanted to talk you through kind of the roll. So basically, they're going to charge you probably about 15 cents to roll. Some of them put a fee on top of that, so it might be more. And in all fairness, that is better than down here when we had those lows. It's about 2 cents off the top, right? But this is roughly what they're going to charge you to roll it. But here's the thing. If you roll it, you still have your downside risk. So basically, the cost of the call is very similar to the cost of the roll, if you want to think about it that way, and you eliminate your downside risk. Get your check from the elevator. It's one of those things. It's not necessarily a right or wrong. You can roll it or you can get the call. But if you can get the call for the price of the roll and eliminate your downside risk, or even cheaper than the roll, just get the call. So it's not a right or wrong. You can do either, but it's slightly better. If you just look at the math, it makes more sense to say, get rid of your downside risk, get the call, and you don't have to deal with the roll. So in a nutshell, those are the recommendations. There's times where action is less necessary. This is a time where action is necessary. So let's just wrap it up. The logic behind what we're doing. Seasonally for corn, it's November. It's not a buy or a sell. Seasonally for beans, it is a sell. The trend for beans is up. The trend for corn is up, and the trend for beans is up. Both are above the 20-day moving average. We don't know the position of managed money because we don't have those reports out of the USDA. If you can't hear it in the tone of my voice, I'm fairly annoyed by that. It really bugs me that we don't have those reports. Basis. Let's get an audio here. In the Eastern Corn Belt, we have seen basis levels for both soybeans and corn strengthening at or above historic levels. There is a ripple effect to basis improvement, and we are gradually seeing basis levels increase farther and farther west. For example, in eastern Iowa. But the storage shortages of most of the Western Corn Belt have kept the basis levels in the Western Corn Belt under pressure. I expect we will see a recovery of those basis levels as well, but we need to move excess harvest bushels first. And as many of those regions had strong yields, this may take a few weeks or even months. The soybean market has been unable to take out the highs from last week. While it is possible that soybeans have another leg up, the fact that we are well above the 20-day moving average, there is a gap below us, a USDA report on Friday, weak South American basis, and strong advances to South American planting season. It seems like a tall order to expect a short-term rally higher in the soybean market. The corn market seems very well supported above the 20-day moving average and potentially poised for a golden cross that could easily push corn prices to the higher fours. Higher $4 range. I don't have a crystal ball. I don't know where prices are going. Nobody does. But generally speaking, it seems like beans are running out of steam on the upside. Corn seems well supported. Those markets would tend to come together. We have a USDA report coming out Friday, and these are recommendations that I feel like for the general risk management of your operation, we're taking a step forward to get the work done that we've been getting gradually done over the last 3 weeks on beans, and now taking some action on the corn as well. Hope you have a great rest of your day, great rest of your week. Let me know if you have any questions.